So we've seen many third world central banks buying gold. Um, and I think some of it is connected to what I mentioned earlier, where it's worries about whether they're holding too much dollars and whether the dollars are vulnerable to what is called confiscation and so on and so forth. There are central banks, but the majority of central banks in the world hold dollars because when you trade with the US, you end up holding dollars, especially if you are a trade surplus trade surplus country. You sell more than you buy from the US. Yeah, you end up with getting repaid. You're getting dollars in your trade surpluses, and they sit in your reserves, and basically you buy treasuries on the back of that. But now, you can imagine to this year itself. I told you that the dollar has weakened by about 10% on the dollar index. The dollar decline this year of 10% so far wipes out 4 years of coupons on your treasuries because it's 2.5%, 2.5%, 2.5%, 2.5%. So you're effectively holding on to this treasury and collecting 2.5% for 4 years, and your currency has already wiped out that 4 years. So you're back to zero because of that. And this is what people fear. If you hold too much and the US continues to debase the US dollar continues to weaken because now it's being diluted. And therefore, whatever you kind of make on holding on to treasuries, it's just not going to make sense anymore. And therefore, you need to move away from gold. So central banks realize that. Of course, no one can take and convert every single dollar they have into gold, but they are doing as much as they can.